Hello and a warm welcome, and I mean that, a very warm welcome given the outside temperatures. From Frankfurt Main Tower, this is Hellerbar's Capital Markets Primary Market Outlook and Update for the last quarter and the one coming on. My name is Thomas Kors. I'm in charge of the financial institutions business at Hellerbar, and my guest, as usual, is Matthias Melms, our head of syndicate and DCM. Hi, Matthias.
Hi, Thomas.
Yeah, well, the market certainly has been hot. Not just outside, but also on our screens and with all our issuers and investors. We have now reached, as we speak, over 160 billion euros worth of total issuance. For example, in our favorite market segment, the covered bonds. That compares to just 140 last year, given that last year was a record year in total issuance, because last year we reached over 200. And I think the majority implications for the forecasts now are also beginning to reach 200 or even more. My personal guess is going to be above 200 billion. But that's just me. Let's have Matthias here give us his numbers. Hi.
Hi, Thomas. Yeah, first of all, let's have a look what is driving the market at the moment. And I have here the swap curve as it is of today in comparison to last month, 3 months ago and beginning of the year. And what is driving the market overall in maturities is the inversion of the curve. As we speak, we have a spread of more than 75 basis points between 2-year and 10-year swap. And when you look on maturities of covered bonds, you can easily see that we have nearly no issuance activity on the long end of the curve.
But Matthias, correct me if I'm wrong, this inversion looks a bit better than it used to not too long ago, right? Or am I mistaking that? Because we've been talking about inverted yield curve now for quite a long time. You know, recession coming, but it hasn't arrived yet. So what's your prognosis here? Are we getting flatter at the end, or is this still going to remain steep?
So we have seen a steepening until beginning of July. I don't have the comparison to July here, but as you can see, 1 month ago, it was not so steep as it is at the moment, but it is less steep than it was before last week.
But that's the short end. At the long end, things have moved up a little bit, right?
At the long end, things have moved up, completely correct. But the overall topic that we have, especially for covered bond issues, is that nearly no one can compensate the 75 basis points between 2 and 10 years. And that explains overall the fact that we have this year so less issuance activity, 10-year and above, and also 7 up to 10 years. And the focus this year is clearly on up to 5 years. And what we've seen the first time for a long time is that the maturity up to 3 accounts for 25% of the issuance activity with covered bonds.
We have seen some attempts at also moving into the longer end, have we not?
Yeah. We have, as you pointed out, we have meanwhile over 150 billion. All attempts so far on the long end of the curve the last weeks were more or less successful, and that's the fact why most issuers really focus on the short end of the curve. And saying that, when you compare the issuance volume in 23 to that in 22, to my huge surprise, I have to say, we have seen more issuance activity this year than last year, and last year was a blow-off, and this year seems to be, and even a better year than it was last year in terms of issuance activity. And that's the reason why we updated our forecast for this year. And as you can see, your guess is 200. Our guess, meanwhile, I have to say, it was 160 at the beginning of the year. And now it seems that we are getting above 200, and we see another around 60 billion coming in the second half of the year. And that would end somewhere around 210.
I would add that if we see an end of the inversion, I would think this figure will be much higher than that. But for the time being, you're probably going to be at the conservative end.
Yeah, as I am. I have to lose some words on region. So what we have seen last year in issuance activity from Austria was remarkable with 15 billion, and last year it was an outstanding year for Austrian issuers, saying that this year we have nearly reached 15 billion alone from Austria, and Austria is together with Canada the third most active jurisdiction.
That's the first time ever, is it?
It's the first time ever, exactly. As usual,
congrats to all the Austrian issuers. You're now at par with Canada.
Yeah, congrats for that, and thanks for all the mandates that we received from Austria. But as usual, German and French issuers are leading in terms of volume and standing together for nearly 80 billion so far out of this 150 billion that we've seen by the end of June, so counting for roughly 50% of the issuance activity.
So we all like change, of course, but there's one thing we really like better, that's continuity in the investor base. So, yeah. But that's true for covered bonds. Now, we have other asset classes as well, of course. Let's look a little bit about the other ones.
Yeah. I have mentioned in our last quarterly updates that we've seen outblowing January for senior pref issuance activity, as we had a kind of, as everyone is talking about, a Goldilocks scenario in terms of the central banks, and they will get no recession. We had a Goldilocks scenario in the senior pref market at the beginning of the year. So we have seen a lot of issuers taking advantage of, at that time, really good issuance conditions. Meanwhile, we are on a level of 75 billion. And as we haven't seen such a high number in the last years, we also have to update our forecast in terms of senior pref issuance activity. And we see a little bit more than 100, and that would be the very first time on senior pref for more than 5 years that we will see more than 100 billion issuance activity.
Sounds like a good scenario to me.
Absolutely. Senior non-pref, I would say we have a market. This is active as it ever was in the last years, and you see nearly not much difference between 18, 19, 20, and this year we have at the moment an issuance volume of 74, and here we see in terms of senior pref, non-pref, we expect an issuance volume of 105 billion euros.
Wonderful.
Coming to the SSA market, we have a very active 23, but it's not the best year ever. That was because of the refinancing needs as a response on the Corona crisis. It was in 21 and in 2020 we have seen high issuance activity. Saying that, with roughly 240, it is nearly as it was in the last year, more or less on the same level. So for the rest of the year, we expect under 110 billion to go, and we now see 350 billion in issuance activity. But let's have a look on a special segment of the SSA market. This is the lender segment, and so far we have seen 28 billion. This is less than in previous year, but it is on an average level before the Corona crisis. What is different this year? Maybe something different in terms of products. We have seen more floaters, especially in the beginning of the year, but even now we have seen some floater issuance. The market is there, but it's not as good as you can imagine and expecting for floaters. So investors staying a little bit sidelined, surprisingly, in a scenario where we expected further rate hikes. So for the rest of the year, we expect issuance activity of another 17 billion and forecast 45 billion.
This is already provisioning for the fact that Mr. Lindner wants to have the Schuldenbremse back in place, right?
Exactly.
So if I add these numbers up, we said 350 billion total SSA volume in euros, probably over 200 in coverts, and I guess around 150 in FIG, i.e. senior pref and senior non-pref. There's a good chance that we get a total of more FIG issues this year than SSAs, right?
That could happen, especially
would be nice for us.
Especially when the covered bond market is performing as is performing now.
Wonderful. So, any sort of spams that could make life difficult going forward?
Of course, the usual subjects, more or less. We have an ongoing war in Ukraine, we have inflation, we have discussions if we get further hikes or not. We see further hikes at least 2 times by the ECB, and we have an environment where a lot of market participants are expecting a recession, and due to the inversion of the curve, we could expect that. Saying that, I think we have a chance, at least in the US, that we have a Goldilocks scenario and the Fed could avoid a recession.
That, I think, would also be an interesting first for a lot of people. Central banks all over the developed world may actually get it right this time. But yeah,
hopefully.
You mentioned the inversion. That, of course, results in something that most investors and issuers are calling the waiting game right now. Let's see what happens. Is this recession coming or not? At the moment, the pointers are going rather to the positive end of things. Senior prefs, at least, seem to be developing as hot as covered. That keeps all of us nicely in the money. And with that, I think we're at the end of our little sort of look into the markets. One thing maybe that we'd like to point out for you is there is the biggest conference for our favorite asset class, the covered bonds, starting in my favorite town in Germany, in Munich, at the middle of September. We all hope to see you at the ECBC 2023. And with that, I say thank you very much for watching again. Hope to see you soon again, live and in person. My name is Thomas Kors. This is Matthias Melms. Stay well.